The Federal Reserve wraps up a two-day policy meeting. Will there be hints of more quantitative easing? Will 0% interest rates be extended into 2014? And just how low will the Fed downgrade their economic forecasts? U.S. futures follow European markets higher after the fifth worst start to November since 1928. I'm Alix Steele, and the Morning Call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alix Steele with The Street, and together we bring you the Morning Call. Happy Wednesday. Finally, a happy day in November. Bespoke said that this was the fifth worst start to November since 1928. How constructive or destructive was the sell-off we saw the last couple days?
I don't think it was that destructive. What it did is it just changed the trade. It went from being a pent-up, like fast and furious, you have to buy every dip. If you're short, you're going to get, you can get run over. To okay, we just didn't hold the 25% retracement. We held the 38.2% retracement, which usually is a sign of commitment to a move. But what that does, it just changes the speed. For now, I know IBD put us back in rally under pressure because we had two big distribution days in a row. So that just gives you a big brush back to say, okay, if you chased the move late, you better clean yourself up. If you bought excessive positions, get a little tighter, and the market has a little bit more to prove right now to resume what has been a nice uptrend since the start of October. All
right, so let's look at some levels because, of course, like you said, the question is now, is it just a counter-trend rally or does it actually have some legs and will last us?
At this point, I think this was a little bit of a retracement in what has been an uptrend, and that uptrend is still intact for now. If you take a quick look at the chart, you will see here, this accelerated uptrend, which is where the pent-up energy has been, was violated to the downside. Okay, short term, what does that mean? It means that some of the trade has changed, but a little bit longer term, if you remember yesterday, we talked about these Fibonacci retracements. What level should you cover your shorts and what level should you potentially buy? Okay, and that 38.2% retracement did hold. This was about 1209 or 1212, somewhere around there. That's where it stopped. Good spot to cover your shorts if you were short, and a decent spot to buy the dip if you sold into this strength. And now what's important is, can we reclaim this broken uptrend or get back into this accelerated channel? So 1238 to about 1245 will be that area of resistance today. If we can close above that, I do think it's constructive, and I do still think the bulls have the ball.
So when would you be adding to any long positions?
I think some people added yesterday. Today, if you're just using the spiders as a gauge, there's an open gap from yesterday. It starts around 123.50. If you look here on the spiders, if you did go long some of the spiders yesterday, what you like to do is see the situation trade into the gap. Okay, so here you have an open gap that puts the bears in short-term control. If we can get above 123.50, you could get a nice trade back up to 124, maybe even 125. But then if it fails at this prior support, which should be resistance, then you know that we could turn back lower. Then you have a high and a lower high. So see what type of gap fill we get here on the spiders. And also, a lot of stocks have the same type of gaps across the board, so use that as a gauge. Similar strategy, but overlap it. But also in stocks, you can see relative strength or weakness, so it's helpful.
Yeah, and I just also want to point out that Bespoke also said that 79% of stocks are still above their 50-day, which signals to them perhaps overbought territory. So is that something that you're watching out for as well?
Well,
besides, or is that showing strength for you?
I think it's showing strength. Okay. That after two crazy days where everyone's starting to bail out on the rally, most of these stocks are still above their 50-day. Some are even above their 20-day. So to me, that's still somewhat healthy. It just means that you don't have to jump in so full force like you had to be in the first 3 to 4 weeks. At the maybe second stage of this move, might be slower, might be more methodical, but there's some risk and some headlines that we have to continue to watch out for.
All right, I want to look at 4 tech stocks that usually are those momentum leaders to see how they're holding up, what that tells us. First is Apple. Really didn't show that much strength yesterday, down 2%. But I do want to say that about 89% of all ratings are buys. In terms of price targets for the next 12 months, there's upside of 27%. I mean, these are all pointing to positive fundamentals for Apple.
The fundamentals on Apple are very strong, and the growth story is very strong. And what I'm typically used to seeing is on a day like yesterday with the Dow down 250 points, you're like, oh, Apple's strong, BIDU strong, Amazon strong. You know what? They weren't that strong. They're like trading with the market. That's something a little different, something we have to recognize. So if you look at the chart of Apple, it's caught in this box type pattern. So if you take a look at the chart, you'll see what I'm talking about. This was that island top. To me, it's a bit concerning. Doesn't mean game over. I still think you could be a long-term holder of Apple. But what you have here is this box or this consolidation that people are trading against. Here's your resistance around 409. Tried to go in there the other day, couldn't, failed, then tested support and held. So right now you have a range here between like 393 and 409. Could stay in here for a while, but when it resolves, either you add to your longs if it gets above and holds above 409.50, or if it breaks below, you're going to see some pressure on the market, and it could work its way down to the 200-day, which would be psychologically a little bit tough to deal with, but still be technically, somewhat okay.
Now, what about Amazon? It was turned positive yesterday for like 2 hours. Was that a positive indicator or a negative because it couldn't hold that momentum?
I think it was a good trade for those looking for relative strength. Ever since, there's different times to be happy with your stock. As an investor, you've always been happy with Apple or Amazon. Obviously they had an earnings shortfall, so it was a bit painful and it's in the penalty box. But as a trader who wasn't involved in the earnings, there's been a lot of opportunity since then. If you take a quick look at Amazon
also,
here.
Also, the penalty box too is because they're just spending so much to grow. So it depends on how you look at the penalty.
Right. Well, it's a penalty that they didn't fulfill what they thought they were going to. So now it has to consolidate, make a new pattern, get new believers before it makes new highs.
The growth can
So for traction to happen, all that means is it needs time. But for trades to happen, it doesn't. So at the chart, you'll see this. Okay. This was your little flag saying, okay, it could be weak. People are losing some faith into earnings, and then you had the earnings shortfall. What it did hold is the 200-day, which was important. And then for a trader who likes to trade stocks into gaps like me, it was a good opportunity. Once it went above this, just say 209, you had a clean 10-point move or so into the gap. And then yesterday, it held this prior move into the gap, and now it seems like there's another short-term trade setting up where if it can get above this 219, you could see another gap fill type trade for cash flow. But overall, if you're an investor, it's still well off the highs, and it's going to need some time to go back and forth and create perhaps a new wedge type pattern and then resolve, if they get their act together, next quarter.
All right, so then two stocks. We only have about a minute, but I want to hit on Google and BIDU. Two things. Google's kind of the same story as Apple. Was down over 2% on Tuesday, but if you look at the price targets, one's like $800. That's from UBS. Others are between $650 and $700. I mean, that's huge upside. And I was reading Helene Meisner's article, who's a technician for Real Money, also saying that BIDU can really see a bounce here. Well,
Google first had the good earnings and has had no traction. As a short-term trade, it's been very frustrating. I've lost money a few times trying to play it above 600. If you look at the quick range here, you'll see this is what you have to work with. This is the earnings gap after a big move. Tried to consolidate it, tried to break above it, couldn't get going. Yesterday was showing some weakness, holding that earnings gap, but if it starts to break below 578, you could see a big earnings gap fill down to about 557 and then maybe even this moving average. Last time, good earnings, tried to hold the gap, couldn't. Not saying it's going to happen this time, but people have footsteps in their head. As far as BIDU, holding up better, decent trade. I think their earnings were taken a little bit better. It's acting a bit better, but just don't be too heavily invested in BIDU.
Now let's see. After our break, we're going to come back and see if you should be heavily invested in gold.
Your favorite.
Yeah, my favorite. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get in the trenches here. Gold and silver kind of clawing their way higher in after-hours trading yesterday. Gold getting a nice pop today, up over 20 bucks, headed into the Fed meeting. What are traders doing with gold? If you were in Tier 1, when do you get into Tier 2?
Well, as an investor, we've been saying always be in Tier 1, and there are certain times to be in Tier 2. When gold was consolidating that low end of the range, the time to be in Tier 2 was when it broke that range to the upside. If you look at the chart, this is what I was talking about. Right here, if you look at this downtrend, this is when it finally resolved to the upside. So if you held even during this correction in your Tier 1, here's your Tier 2. Gave you a nice move back to 170, and then this is yesterday's action. So Alex, we were on the floor yesterday. The market's getting crushed. Gold was, or the GLDs were down 30 cents. So traders who follow momentum said, you know what? It's a good spot to buy because it showed relative strength, closed strong, held support, and now it's up like $1, or gold is up like $17. So they're getting rewarded for taking that trade according to the good book. And as long as you follow the rules as a trader, you could always catch a move from like yesterday into today.
So would you be taking profits then on today, or are you going to stick with it and see how it plays out?
Well, traders are very fickle, and they're probably uncommitted. So if you're just trading gold and you're using it as a vehicle on a good pattern, they probably bought it yesterday, and they're probably going to sell into today. But the real resistance on the GLD is right here. You have this little pivot around 170, and then you do have an open gap, which was way back when from September-ish, that could get filled up to about 173. This is the next big resistance. So people who bought it yesterday on this strength will probably sell into 170. Some committed might stay with it. If it gets above 170, you could see a squeeze up to 173 on the GLD.
And the real mover, of course, is the U.S. dollar, and then moving really inversely, so it's going to be really jumpy in relation to the euro and the dollar. Really quickly, before we go to 2 gold stocks, I want to go to silver. It's also been having some nice moves, but of course more volatile compared to gold. Are you guys trading that right now?
I haven't heard people say silver in a while.
Yeah.
I think like a few weeks ago, some people were chirping about it. There was a decent pattern, but since then, the movement hasn't been so great. So if you look here at SLV, you'll see that it's had a move. I guess this was the day that it also broke to the upside with gold. Nice little trade. What this did is this actually filled the gap. That's why I talk about gaps getting filled, and I love to trade it because enters the gap, fills the gap, and then fails. But what it did do, like gold, I guess, it held that prior breakout, and it has some room back to 34. I don't think it's so enticing or compelling, but it could move with gold to the upside still.
And if Fed doesn't do anything today after their meeting, do you think that there'll be some sort of disappointment, sell into the rumor, but buy into the rumor, but then sell the news kind of trade?
It definitely could happen.
Yeah,
it happens
okay.
all the time on Fed Day, just like the indices. They could probably take us up into Big Ben's testimony. Then the question is, do they sell it right there and they just squeeze people, or does it hold in there close strong, and then that'll change the trade for Thursday?
All right, 2 gold stocks I want to take a look at is Randgold. Reported earnings this morning. They came in at, let me get my chart. Here we go. Made $1.17 a share. That was light. Revenue was almost 110 million, also light. And production was down slightly. They missed by like 2,000 ounces here. But quarter over quarter, profit was down about 4%, but year over year was up 335%. Over in Europe, the stock was up about 6% after they came out with the numbers. I think that its investors loving the growth story. They're still on target to produce about 740,000 to 760,000 ounces of gold this year.
That's a lot of gold. And let's take a look at the golden chart. Oh. Anyway, GOLD, above the moving averages. This has actually been holding by the top end of the range. So institutions have been liking this one. They've been expecting something big. Okay, I don't know if it's opening above the 52-week high, but typically what you want to do is if it's going to open up and make a move above this area resistance, it has to hold 115. So don't chase it in the first 15, 30 minutes, but if it can hold and show a 30-minute commitment above 115, use that as your don't pass line, and then perhaps you get a real breakout here, which we haven't seen that many. So just be careful.
And this was one of the ones that turned positive yesterday versus, say, a Newmont that still couldn't end in the green. Reported earnings last week. All the numbers were solid except production was down 7% despite this juicy dividend that's tied to the gold price. Is this also a good trade, or has the momentum love here kind of died?
I see a nice pattern developing, and it's good that earnings are out of the way so you don't have to worry about holding through them. And if that's out of the way and you have a nice price pattern and gold prices continue to move, you could see some traction in these miners. So look at Newmont. I know a few guys that love this, and it looks pretty good. This is a nice upper level consolidation. It's above the moving averages. I would say if this could start getting back above 68 or 68.50, you could see a move to new highs here. So Newmont is in the game. If they like the miners, they're going to love Newmont.
All right, let's go to some quick ways to make some cash. We don't have a ton of time, so let's get to it. Las Vegas Sands closed up yesterday as well. Positive momentum.
You love seeing stocks go green in a red tape. I would stick with LVS for the long and short term.
Now Goldman hitting that low about 102 yesterday. Now what?
I think it's got some room back to about 110, 112, but then that'll be major resistance.
And IBM down almost 2% yesterday. Should investors be cautious now here?
IBM, we have to show you the chart. I have to show you some here and there. It did hold once again this rising channel, so as long as it stays above it, the short-term momentum will stay there. But if it starts to break below 180, you could see 175, so use 180 as your don't pass line long.
And Valero reported killer earnings yesterday, but the stock really didn't do much at all. It's been trading in that 16.31 range for the net last year. Despite these killer profits, it basically buys WTI prices and sells oil for Brent prices, so it's just raking in the cash.
It showed some relative strength yesterday. If you have to trade something in that group, I like VLO as a long versus some others.
And CF reported after the bell yesterday, kind of squeaked by on earnings, but was light on revenue down before, right? Down after the earnings.
You know what? I didn't take a look at it, but if I'll take a quick look at the chart.
I think it was down about 5% after they reported numbers.
Okay, so at this point, if it's down after hours, I think big support here comes in around 140. So if you want to buy this dip, 140 is the area. And sometimes ags open up down on earnings, so see if they reverse it. If they reverse CF to the upside on those earnings, the ags will get a boost today.
Good one. All right, we're going to wrap it up here really quickly with the Fed. So, Scott, I was reading through some research reports yesterday, and it seems like a lot of analysts really expect some kind of QE3, but not to be announced until next year, mid-next year. But what they're really looking for, aside from the downward forecast revisions for growth and for unemployment, is really going to be any kind of language change. Are they going to start pegging rates to conditional triggers? Like if employment stays above 7% and inflation is below 3%, will they keep rates low indefinitely until that changes? I think that that's what people are really looking for. Do traders care?
Yes, traders care, and I think we're in a different spot. If we were gunned over 1,300, which I talked about on Friday, I think the tone wouldn't have been as market friendly. But now that we just had this 2-day pull-off, and you have everything going on in Europe and the referendum by Papandreou and this and that, I think they're going to be a bit more supportive because they want people to have some trust and some confidence in the market. So they're going to do what they can to ease some of the tensions and just keep it status quo. I don't think they're going to shake anything up today.
Do you think they're going to do something positive or hint at more supportiveness, or just that that's going to be their general tone?
I think that'll be the tone, and we'll see what they do as far as their mortgage buying. We've been in Operation Twist now for how long?
They announced it last time, so that was September, so not very long.
So I don't think they have the opportunity or the capabilities of changing much, but sometimes his language is always soothing. Big Ben likes to soothe the markets.
All right, traders looking for some nice medicine from Big Ben, soothing medication. All right, that's it for us for today. Happy trading, everybody. I'm Alix Steele from The Street.
And I'm Scott. Make sure to follow us on the virtual trade floor and in the chat. There's a lot going on, a lot of headlines to deal with, and we usually have about 1,000 eyeballs looking, so use that to your advantage. Have a great day trading.